Hello and welcome to News Center. I'm Parikshit Tutra. With only 4 days to go before US's August 1st deadline to impose tariffs, trade talks between New Delhi and Washington are in a stalemate. Sources tell CNBC-TV18 that there is no major breakthrough as US is seeking a more ambitious agreement with India. The United States wants zero-duty access to the Indian markets like America's deals with Vietnam and Indonesia. The Trump administration is also pushing for India to commit to big-ticket purchases and investments. Meanwhile, India is evaluating its options ahead of the deadline. The options include the imposition of equal reciprocal tariffs. Remember, US Commerce Secretary Howard Lutnick has said that Washington's August 1st deadline will not be extended. Both nations plan to agree on a bilateral trade agreement by October. A delegation from the US is expected to visit India in August for the 6th round of talks. To take this discussion ahead, I'm now joined by Jayant Dasgupta, former Indian ambassador to the WTO, and Sudhir Sekhri, chairman of the Apparel Export Promotion Council. Also on the program with us, Ajay Sehai, Director General and CEO of the Federation of Indian Export Organizations. Gentlemen, thank you very much for joining us. Ambassador Dasgupta, to begin with you, do you think India now, in the absence of any kind of interim deal, will have to be ready, prepared for an eventuality where there may not just be 26% reciprocal tariffs, but plus a 10% additional BRICS tariff as well?
Of course, we are keeping our fingers crossed as to whether there would be an agreement before the 1st of August deadline. But failing that, India could expect something in the region of 20-25% perhaps as tariffs. Because Indonesia has got 19%, Vietnam 20%, Japan and Korea 25%. So I think that is, and of course, the Europeans seem to have got 15%. Of course, the agreements, details of the agreements with Japan, EU, Indonesia, none of them have come out. And it is also not very clear whether the full written text is available at all with either side. So there is a lot of uncertainty, but I think the tariffs, if they are imposed by President Trump, will be perhaps, hopefully, in the region of 20% or so. Now, the other thing is that India is negotiating not only against this deadline of the 1st of August, but the first tranche, which is supposed to be ready by about October, and which will cover a very wide-ranging array of subjects on trade. So President Trump, while taking a decision, would definitely bear that in mind, that even if there is no agreement in the interim, the first tranche could be negotiated, and steps have been taken in that direction.
Right. So let's see how exporters and companies in India are preparing despite all this uncertainty. Mr. Sekhri, to get you in, how is this impacting your businesses, your exports to the United States? In the eventuality there is a 25% or a 26% tariff, how is the business going to be impacted?
Well, you see, we have to see it in the context of what is going to happen with our competition. Our business today is definitely at a standstill because the buyers are not clear as to what the tariff is going to be. So they're holding back on orders. I'm talking about the US buyers. Our business Europe is also impacted because of the high tariffs that the US has imposed on China. A lot of Chinese manufacturers are now selling to Europe at very low prices. So that's where a lot of European orders are also moving to China. Now, coming back to the US context, yes, we definitely look forward to a very fair and equitable tariff for India. And what we have been given to understand by government sources is whatever best the government could offer has been offered to them, and we cannot do anything better than what we've done. So given this scenario, we are keeping our fingers crossed, like the ambassador just said. But we believe, based on sources, that it could be anything from 15 to 26%. Now, as a worst case scenario, even if it's 26%, We are still better off than Bangladesh, which is at 35%. We are better off than China, which is at 30%. We are better off than Vietnam, because Vietnam is 20% plus 20% if it's transshipment. Well, Indonesia is a bit of a competition. So they are at 19%. So we stand to lose a little bit there. But my belief, it could be anything between 15 to 26, but closer to 15 than 26.
Okay. Let me go to Mr. Ajay Sahai Rao for a larger comprehensive picture of India's exports to the US. Are you seeing probably buyers holding up orders or cancelling orders in the run-up to the 1st of August deadline? Mr. Sahai, which sectors, according to you, are most impacted currently?
In fact, I'm not looking into any case where they are looking into cancellation of the orders. Orders are on hold, no doubt about it, but large inventory has already been built in the US. And in the given context, when I'm looking into a tariff in the range of 20%, I'm not expecting much hampering of exports. So probably the bottom lines of companies may be impacted. Even assuming the tariff on India comes to around 20%, we may be worse off with some of the countries. I'm pretty sure that buyers and sellers both will take a call on them and both will ensure that the supply line is intact. So there's not much challenge on the exports per se, but of course there are issues with concern with the profitability of the companies, because they also have to take a hit if some sharing is being done, assuming that the additional tariff on India comes to 10% and it is decided to be distributed between buyer, seller, and consumer. An impact of 3 to 4% maybe on the profitability of the Indian companies.
Right. Let me go back to Sunil Sekhri. Mr. Sekhri, will the companies in the US, your clients in the US, be able to absorb the cost if the tariffs are between 20 to 26%? Will the exports continue as it is?
Well, you see, first of all, the point I'd like to make here is that, people need to wear clothes, so they will buy clothes. Only thing is that a person who is buying, say, maybe 4 shirts every season, he'll probably buy 2 shirts. So, see, there is going to be a slight decline in business. However, keeping in mind that our competitors are going to be hit with higher duties, our business from India may not be that much impacted. And like Mr. Sahai just said, I think people are just waiting for this 1st of August deadline. And once things are clear, whether it's going to be 26% or 20%, I think there's going to be a flow of orders, and we're going to have sufficient orders to take us through the spring-summer season, which ends somewhere, which is through October 25 to March 26.
Right. And Mr. Sahai, just one quick question. In case Donald Trump decides to impose a 26% reciprocal tariffs plus a 10% BRICS tariff, making it 36%, as some reports are speculating, could that probably hit trade badly? Anything beyond 26?
Definitely, if the tariff of 36% is imposed on India, may not be possible for the Indian exporter or the US importer to absorb it. And in that scenario, it may be impacted, but then we also have our options of retaliation also. As of now, we are only expecting a tariff not more than 26%. We are also looking into that 10% tariff will be applicable on all the countries. So only the differential of 16% has to be managed by the Indian exporters, and US importer will also be looking into that sooner or later. India will have a VTA in place, and that's why they would like to retain the supply chain.
All right. So clearly, both sides will work with a long-term scenario in mind. Ajay Sahai, Sudhir Sekhri, Mr. Jayant Dasgupta, thank you very much for joining us on the program. We're taking a short break, but coming up, TCS has announced more than 12,000 job cuts in what is the biggest layoff in the software industry yet. A special discussion with R. Chandrasekhar, former president of NASSCOM, and Mohandas Pai, former HR head at Infosys and chairman, Aaron Capital, when we return.